Based on the historical data and forecast, Bitcoin shows a clear upward trend. The price has consistently tested and bounced off the support level of $71,200, while the resistance level is $86,600. The RSI has fluctuated between 43.4 and 62.8, indicating periods of both oversold and overbought conditions, but overall, it suggests strengthening momentum. The Bollinger Bands have been expanding, signaling increased volatility and potential for price swings. Considering these factors, I recommend a long position strategy with an entry price of $74,700 on April 17, 2026. A stop loss should be set at $74,100 to protect against unexpected downturns, and a target price of $78,400, aligning with the forecast for April 23, 2026, can be aimed for. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the price touches the lower Bollinger Band and the RSI dips below 30, it signals a potential buying opportunity. Conversely, when the price touches the upper Bollinger Band and the RSI exceeds 70, it suggests a possible selling point. However, given the current upward trend, we'll prioritize the long position. Therefore, maintaining a long position from $74,700 with a stop loss at $74,100 and a target price of $78,400 is the most efficient portfolio. This strategy leverages the forecast, support and resistance levels, and technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Ethereum exhibits an overall upward trend, supported by consistent price increases and a break above the resistance level of $2,370. The RSI indicates periods of both oversold and overbought conditions, suggesting potential entry and exit points. The Bollinger Bands show the price fluctuating within a range, with the forecast indicating a potential breach of the upper band. Considering these factors, I propose a long position strategy focusing on capitalizing on the upward momentum. We will enter a long position at $2,330, placing a stop-loss order at $2,240, just below the support level, to mitigate potential losses. The initial target price will be $2,480, aligning with the forecast high and the upper Bollinger Band. To refine this strategy, we will incorporate RSI signals. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position at $2,330, with a stop loss at $2,240 and a target price of $2,480. Conversely, if the RSI reaches 70 or above, signaling an overbought condition, we will consider taking profits or tightening the stop loss. The core of the portfolio will be the long position with a focus on the upward trend, using the RSI and Bollinger Bands to fine-tune entry and exit points for optimal returns. Based on the historical data and forecast, XRP shows a generally upward trend with recent price volatility. The RSI consistently fluctuates, with values occasionally dipping below 40, indicating potential oversold conditions. The Bollinger Bands have been widening, suggesting increased market uncertainty. Considering the support price of $1.39 and the forecast prices moving toward $1.49, I recommend a combined strategy leveraging RSI and Bollinger Bands. We will implement a long position when the RSI falls below 30 and the price touches the lower band of the Bollinger Bands. Specifically, on April 17, 2026 Friday, the forecast price is $1.4 and the RSI is predicted to be below 30. Therefore, I suggest entering a long position at $1.38. Place a stop-loss order at $1.36 to limit potential losses. The initial target price is $1.45, aligning with the forecast price and the upper Bollinger Band. If the price reaches $1.45, we will move the stop-loss to break even at $1.38 to secure profits and further protect the investment. A secondary target price is $1.49, based on the resistance level. This combined approach aims to capitalize on the anticipated upward trend while mitigating risk through strategic stop-loss placement and dynamic target adjustments. Based on the historical data and forecast, BNB shows a generally upward trend, consistently testing the support price of $620. The RSI has fluctuated, dipping below 40, indicating potential oversold conditions, but recently trending upwards, suggesting increasing bullish momentum. The Bollinger Bands have been widening, indicating increased volatility and potential for price movement. Given the forecast prices, which consistently predict increases, I recommend a long position strategy. Specifically, we will initiate a long position at $621, coinciding with the first forecast price. The stop loss will be set at $600, slightly below the recent low and the support price, to protect against unexpected downturns. The initial target price will be $654, aligning with the forecast price for April 23, 2026. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the RSI falls below 20, indicating a strong oversold condition, we will enter a long position at the subsequent price. Conversely, if the price touches the lower Bollinger Band, we will also enter a long position. If the price reaches the upper Bollinger Band, we will take partial profits and adjust the stop loss to protect gains. The final target price will be $654, capitalizing on the bullish forecast. This layered approach, combining trend analysis, RSI signals, and Bollinger Band confirmations, aims to maximize returns while mitigating risk. Based on the historical data and forecast, Solana demonstrates a generally upward trend, supported by consistently breaking through the resistance level of $91.4. The RSI values fluctuate, but have been trending upward, suggesting increasing bullish momentum. The Bollinger Bands indicate periods of volatility, but the price has been consistently trending towards the upper band, further confirming the bullish outlook. Considering these factors, I recommend a long position with an entry price of $85.8. To manage risk, set a stop loss at $83.7, just below the recent low. For the target price, aim for $89.8, aligning with the forecast for April 23, 2026, and providing a reasonable profit margin. To refine this strategy, I will incorporate RSI and Bollinger Band signals. When the RSI falls below 30, indicating an oversold condition, consider entering a long position. Conversely, when the RSI exceeds 70, signaling an overbought condition, consider taking profits or reducing exposure. Furthermore, if the price touches the lower Bollinger Band, it suggests a potential buying opportunity, while a touch of the upper band may indicate a potential selling opportunity. Combining these signals with the overall upward trend, the optimized strategy would be to enter at $85.8, set a stop loss at $83.7, and target $89.8, adjusting positions based on RSI and Bollinger Band signals to maximize returns. Based on the historical data and forecast, TRON exhibits an upward trend with consistent support around $0.32. The RSI consistently fluctuates above 60, indicating bullish momentum, though occasionally approaching oversold conditions. The Bollinger Bands show the price generally trading within the bands, with the forecast suggesting a continued upward trajectory towards $0.333. Given these factors, I recommend a long position strategy. We will enter a long position at $0.327, coinciding with the recent peak and the start of the forecast period. To manage risk, place a stop-loss order at $0.32, just above the established support level. For the target price, we aim for $0.333, aligning with the forecast and representing a reasonable profit margin. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. When the RSI dips below 20, indicating an oversold condition, we will enter a long position at the bottom of the Bollinger Bands. Conversely, when the RSI exceeds 80, signaling an overbought condition, we will consider taking profits or tightening stop-loss orders. The portfolio will prioritize the long position strategy with an entry price of $0.327, a stop-loss at $0.32, and a target price of $0.333. This approach combines trend analysis, support and resistance levels, and technical indicators to maximize potential returns while mitigating risk. Based on the historical data and forecast, Dogecoin shows an upward trend with increasing forecast prices. The RSI consistently fluctuates, with recent values nearing the overbought territory, indicating potential for a pullback but also suggesting continued bullish momentum. The Bollinger Bands have been expanding, signifying increased volatility and potential for price swings. Considering these factors, I recommend a long position strategy. The entry price should be $0.0962, coinciding with the first day of the forecast period and a relatively low price within the predicted range. A stop loss should be placed at $0.094, slightly below the recent low of the Bollinger Bands and providing a buffer against short-term downward fluctuations. The initial target price is $0.101, aligning with the resistance level and the upper Bollinger Band. This offers a reasonable profit margin while acknowledging the potential for further gains. However, if the price breaks through the resistance, the target price can be adjusted to $0.102, based on the forecast. This strategy combines technical indicators and price action analysis to capitalize on the anticipated upward trend while managing risk through strategic stop-loss placement. The portfolio will allocate 60% to this long position, 30% to a short position if the RSI falls below 30, and 10% to cash for flexibility. Based on the historical data and forecast, Cardano demonstrates a sideways trend with price fluctuations between the support of $0.246 and the resistance of $0.263. The RSI fluctuates around the mid-level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing, suggesting decreasing volatility. Considering the forecast for the next week, the price is expected to remain within a tight range, with a slight upward bias. Therefore, I propose a conservative strategy focusing on short-term price movements within this range. I recommend a portfolio with a combination of strategies. First, when the RSI falls below 40, enter a long position at $0.234 with a stop loss at $0.232 and a target price of $0.251. Second, when the RSI rises above 60, enter a short position at $0.262 with a stop loss at $0.264 and a target price of $0.248. Third, when the price touches the support price of $0.246, enter a long position with a stop loss at $0.244 and a target price of $0.254. This combined approach leverages both momentum and range-bound trading, aiming for consistent profits while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a potential for upward movement. The RSI consistently dips below 40, indicating oversold conditions, suggesting a buying opportunity. The Bollinger Bands show that the price is currently near the lower band, reinforcing the potential for a bounce. Considering the forecast, the price is expected to rise to $464 within a week, further supporting a bullish strategy. I recommend a long position with an entry price of $422. The stop loss should be set slightly below the support level at $418 to mitigate potential losses if the price reverses. The initial target price should be $452, aligning with the resistance level. To maximize potential returns, I suggest a tiered target approach. Once the price reaches $452, consider moving the stop loss to break even to protect profits. The next target price is $464, based on the forecast. If the price reaches this level, consider taking partial profits and tightening the stop loss to $458. Finally, if the price continues to climb, a final target price of $481 can be considered, but with a reduced position size and a trailing stop loss to capture further upside while managing risk. This strategy combines RSI, Bollinger Bands, and forecast data to create a robust and adaptable investment plan. Based on the historical data and forecast, Chainlink demonstrates an overall upward trend, supported by consistently testing the $9.34 support level and the forecast predicting further price increases. The RSI values fluctuate, but generally remain within a range, suggesting neither extreme overbought nor oversold conditions currently. Considering the Bollinger Bands, the price has recently been approaching the upper band, indicating potential for a pullback. Therefore, I recommend a long position strategy. Entry price should be $9.28, aligning with the first day of the forecast. Place a stop-loss order at $9.18, slightly below the recent low of the Bollinger Bands to mitigate potential losses. The initial target price is $9.7, coinciding with the forecast price on April 21, 2026. To maximize returns, I propose a dynamic adjustment to the target price. If the price reaches $9.7, move the stop loss to break even, protecting the initial investment. If the price continues to rise, adjust the target price to $9.8, near the upper Bollinger Band. If the RSI reaches 80, consider taking partial profits and tightening the stop loss. This strategy combines trend following with risk management, leveraging both the bullish forecast and technical indicators to achieve high returns while limiting potential downsides. This portfolio is efficient because it combines the RSI, Bollinger Bands, and support and resistance price. Based on the historical data and forecast, Aptos exhibits a clear upward trend, supported by consistently breaching the center of the Bollinger Bands. The RSI consistently fluctuates, but shows a general increasing trend, nearing the overbought level of 80. Considering the forecast for the next week, with prices predicted to reach $1.01, I recommend a long position strategy. Entry price should be $0.909, coinciding with the first forecast price and a relatively low point in the recent trend. To mitigate risk, set a stop loss at $0.875, slightly below the recent low of the Bollinger Bands. The target price should be $1.01, aligning with the final forecast price and a reasonable profit target given the current momentum. To refine this strategy, I suggest incorporating RSI signals. When the RSI dips below 30, it indicates an oversold condition, signaling a potential buying opportunity. Conversely, when the RSI exceeds 70, it suggests an overbought condition, prompting a consideration to secure profits. Therefore, an optimized portfolio would involve an initial long position at $0.909 with a stop loss at $0.875 and a target price of $1.01. If the price retraces to the support level of $0.957 and the RSI falls below 30, consider adding to the position. This layered approach allows for capitalizing on the upward trend while mitigating downside risk and maximizing potential returns. Based on the historical data and forecast, Walrus shows a slight upward trend with periods of volatility. The RSI fluctuates between 40 and 56, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands suggest periods of consolidation and expansion. Considering the forecast for the next week, with prices ranging from $0.0736 to $0.0767, a moderately bullish strategy is recommended. We will implement a combined strategy utilizing RSI and Bollinger Bands. The entry price will be $0.073 when the price touches the lower Bollinger Band. The stop loss will be set at $0.069, just below the recent low and below the lower Bollinger Band, to mitigate potential downside risk. The initial target price will be $0.0781, aligning with the recent resistance level and a reasonable profit target. If the price reaches the target, we will adjust the stop loss to the entry price to protect profits. This combined strategy aims to capitalize on short-term upward movements while managing risk effectively. Based on the historical data and forecast, Arbitrum exhibits an overall upward trend. The price has been consistently moving above the center of the Bollinger Bands, indicating bullish momentum. The RSI values fluctuate but generally remain above 50, further supporting the uptrend. Considering the forecast for the next week, with prices predicted to rise to $0.135, I recommend a long position. The entry price should be set at $0.121, coinciding with the first forecast price. A stop loss should be placed slightly below the support price of $0.0988, at $0.097, to limit potential losses if the trend reverses. The initial target price should be $0.13, aligning with the forecast peak. To refine this strategy, I'll incorporate RSI signals. If the RSI dips below 20, oversold, it could be an opportunity to enter a long position. Conversely, if the RSI exceeds 80, overbought, consider taking profits or tightening stop-loss orders. The Bollinger Bands can provide further confirmation. If the price breaks above the upper band, it suggests continued upward momentum, potentially warranting an increase in the target price. If the price touches the lower band, it could indicate a temporary retracement, but the stop loss at $0.097 should protect against significant losses. Therefore, the final portfolio will be a long position with an entry price of $0.121, a stop loss at $0.097, and an initial target price of $0.13. Based on the historical data and forecast, Polkadot exhibits a volatile trend with periods of both upward and downward movement. The RSI consistently fluctuates, dipping below 40, indicating oversold conditions frequently. The Bollinger Bands show that the price has recently approached the lower band, suggesting a potential bounce. Considering the support price of $1.24 and the forecast for the next week, I recommend a long position strategy. Specifically, enter a long position when the price reaches $1.22, setting a stop loss at $1.19 to limit potential losses. The initial target price should be $1.27, aiming to capitalize on the anticipated rebound. To refine this strategy, incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the RSI rises above 60 while the price is near $1.27, consider raising the target price to $1.32. Conversely, if the price touches the lower Bollinger Band again, re-evaluate the position and potentially adjust the stop loss to $1.2. The overall portfolio will be 60% long position, 20% short position, and 20% cash. This diversified approach aims to maximize returns while mitigating risk, taking advantage of the predicted price movements and technical indicators. Based on the historical data and forecast, Ethena shows a generally upward trend with increased volatility. The RSI consistently stays above 30, indicating that the asset is not severely oversold. The forecast prices predict a continued upward movement, reaching $0.11. Considering the support price of $0.106 and the resistance price of $0.12, our strategy will focus on capitalizing on the upward momentum while managing risk. Our strategy involves a tiered approach. First, we will enter a long position at $0.0978, utilizing the initial forecast price as our entry point. We will set a stop loss at $0.095, just below the recent Bollinger Band's lower band, to protect against unexpected downturns. Our initial target price will be $0.105, aligning with the forecast for April 21, 2026. If the price reaches $0.105, we will move our stop loss to break even at $0.0978. If the price continues to rise, we will set a second target price at $0.11, based on the forecast for April 23, 2026. This strategy combines the momentum of the forecast with technical indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Lido DAO shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by the expanding forecast prices from $0.386 to $0.463. The RSI indicates that the asset is currently in overbought territory, reaching 74.5, but the forecast suggests continued momentum. We will implement a strategy combining RSI and Bollinger Bands to capitalize on this trend. Our primary strategy will be a trend-following approach with a focus on breakouts. We will enter a long position when the price breaks above the upper Bollinger Band, signaling strong bullish momentum. Our entry price will be $0.463, coinciding with the forecast high. To manage risk, we will set a stop-loss order just below the lower Bollinger Band at $0.413. For the target price, we will aim for the resistance level of $0.496, providing a substantial profit margin. This strategy combines the momentum indicated by the Bollinger Bands with the established support and resistance levels, aiming for a high-return investment with defined risk parameters. The potential reward-to-risk ratio is attractive, making this a suitable option for investors seeking high returns. Based on the historical data and forecast, Pendle shows a generally upward trend with periods of consolidation. The RSI consistently dips below 40, indicating oversold conditions, while the forecast suggests continued upward momentum. The Bollinger Bands are widening, indicating increased volatility and potential price movement. we will implement a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Initially, we will focus on the oversold conditions indicated by the RSI. We will enter a long position at $1.14 with a stop loss at $1.08, just below the recent low of the Bollinger Bands. Our initial target price will be $1.26, aligning with the support level, aiming for a quick profit. Subsequently, as the forecast predicts a rise to $1.26, we will adjust our strategy. If the price reaches $1.26, we will move our stop loss to the entry price of $1.14 to protect profits. If the price continues to rise, we will set a second target price at $1.32, the resistance level. If the price hits $1.32, we will take partial profits and move our stop loss to the previous high, $1.28. This tiered approach allows us to capitalize on both short-term and long-term upward momentum while mitigating risk with strategically placed stop-loss orders. Based on the historical data and forecast, Conflux shows a generally upward trend, particularly noticeable in the recent days with a surge to $0.0678. The RSI consistently moved above 40, indicating a bullish momentum, and the forecast predicts continued price increases, reaching $0.0684. The support price is stable at $0.0669, while the resistance is at $0.0714. Considering these factors, I recommend a long position strategy. We will use a combination of RSI and Bollinger Bands to refine the entry and exit points. The entry price will be $0.0595, triggered when the RSI is below 40 and the price is near the lower Bollinger Band. The stop loss will be set at $0.05, just below the lower Bollinger Band, to protect against a potential downward reversal. The initial target price will be $0.0658, aligning with the forecast and the upper Bollinger Band. If the price reaches this target, we will move the stop loss to the entry price $0.0595 to secure profits and allow for further upside potential. A final target price of $0.0684 will be set, close to the forecasted high and near the resistance level, to capitalize on the predicted upward momentum. This strategy balances risk and reward, leveraging both technical indicators and price forecasts for optimal returns. Based on the historical data and forecast, Celestia shows a clear upward trend, particularly evident in the recent days with a surge to $0.411. The RSI indicates the asset has moved from oversold territory to nearing overbought levels, currently at 73.6, suggesting strong momentum. The Bollinger Bands are widening, indicating increased volatility and potentially further price movement. Considering these factors, I recommend a long position starting on April 17, 2026, at $0.344. The stop loss should be placed just below the support level at $0.33 to protect against a potential pullback. A first target price can be set at $0.385, aligning with the forecast for April 21, 2026, and a second target price at $0.414, coinciding with the forecast for April 23, 2026. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, it presents a buying opportunity, as it suggests a potential rebound. Conversely, touching the upper band signals a possible pullback. Combining this with the RSI, we can fine-tune entries and exits. For example, if the RSI is approaching 80 and the price is near the upper Bollinger Band, consider taking profits or tightening the stop loss. This combined strategy aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement and target price adjustments based on technical indicators. Based on the historical data and forecast, ORDI demonstrates a strong upward trend, particularly evident in the recent surge to $8.29 and the projected increase to $8.2. The RSI values indicate periods of both oversold and overbought conditions. The Bollinger Bands show a widening trend, suggesting increased volatility and potential for significant price movements. Considering these factors, I propose a portfolio strategy combining RSI and Bollinger Bands, with a focus on capitalizing on the upward momentum. The primary strategy involves entering long positions when the RSI dips below 42.3 and the price touches the bottom of the Bollinger Bands. For example, on April 11, 2026, when the RSI was 42.3 and the price was around $2.13, enter a long position at $2.14. Set a stop-loss order at $2.06 to mitigate potential losses if the trend reverses. The initial target price should be set at the resistance level of $4.93. If the price continues to rise, as indicated by the forecast, a second target price can be set at $8.2. This combined strategy aims to leverage both momentum and volatility for high returns.